Welcome back to the Deep Dive. It's Thursday, January 29, 2026. And today, well, we're not just looking at a quarterly earnings report.
Not at all.
We're looking at what is, I think, effectively a corporate reincarnation. We have been through Tesla's Q4 2025 earnings call, the 10K report that dropped yesterday, and there's just so much to unpack here.
Honestly, most of the time when we do these, we're looking at margins, right? Delivery numbers, maybe a little tweak in the guidance, and we have those, sure. But this time, this feels like we're reading the first chapter of a completely different book.
It really does, because on the surface, if you just glance at the numbers, they were solid. They beat on revenue, they beat on EPS. But you scroll past that, and the strategy update is, well, it's shocking.
It is.
Tesla is killing off the cars that literally made them a household name, all to build an army of robots.
It sounds like hyperbole when you say it out loud like that, doesn't it? But that is literally what the plan says. We're looking at the end of the Model S and X, the start of the Cybercab.
And a $20 billion bet on infrastructure.
Exactly. The CFO actually said, this isn't just a new chapter. He called it the start of a new book.
So let's open that book, because I think for me and for a lot of you listening, the emotional part here is the car lineup. I mean, we all watched the Model S redefine what an EV could be.
Oh, absolutely. It was the status symbol.
It was the car that forced the entire industry to change. And now they're just, pulling the plug.
That's the plan. Production ends next quarter. They're calling it an honorable discharge.
An honorable discharge. That sounds almost, I don't know, military. But it's still a retirement. Why now? Is it just that the platform is old?
That's part of it for sure. But the strategic reason is much more pragmatic. It's basically a real estate issue.
Real estate.
Think about the Fremont factory. It's their original plan, and it is packed to the gills. They can't build anything new there unless they take something old out. They physically need the floor space.
Okay, so clear out the S and X lines.
Yeah.
The flagships are gone.
Yeah.
What are they putting in that space that is so important it justifies this? Robots.
Specifically, the Optimus robot. They are converting the entire Model S and X assembly lines into a dedicated Optimus factory.
And the scale they're talking about here it's kind of mind-bending, right?
It is. This is not a pilot program with a few hundred units. The target capacity for that specific space, where they used to build those cars, is 1 million Optimus units per year.
Hold on. 1 million humanoid robots a year.
Per year.
In the same factory footprint that used to build, 50,000 luxury cars?
Exactly. And that density tells you everything you need to know about the economics they're chasing. A car is this huge metal box, right? It takes up a ton of room to stamp and weld and paint.
Right.
A humanoid robot is, it's human size. It's compact. You can pack the manufacturing lines so much tighter. The bet is that one general-purpose robot is going to be worth far more than a premium sedan ever was.
That's a massive shift in the value proposition. You're trading a $100,000 car for a robot? Is the demand really there?
Well, Musk was incredibly bullish on this. On the call, he said he believes Optimus will eventually move the needle on U.S. GDP.
Not just Tesla's revenue, but the entire country's GDP.
The whole country. The idea is that if you solve labor, if you have a machine that can do dangerous, boring, repetitive tasks, you basically solve the main constraint on economic growth.
That's a huge claim, solving labor. But, we have to ground this a bit, because we have heard aggressive timelines before. I saw some specific language in the report about the S-curve for robot production. What does that actually mean for the next year or two?
This is where the engineering reality kind of checks the ambition. They're unveiling Optimus Gen 3 in a few months, and the key phrase they used was physics first principles.
We hear first principles a lot. Here, does that just mean they designed it from scratch?
It means they're not using off-the-shelf parts. If you build a car, you can buy tires from Michelin and brakes from Brembo. There's an entire ecosystem for a humanoid robot of this capability. That supply chain just doesn't exist. There's no catalog you can open up to buy a chaotic hand actuator.
So they have to invent the part, and then they have to invent the machine that makes the part?
Precisely. And Musk warned that because of that, the manufacturing ramp, the S-curve, is going to be stretched out. It'll start very, very slow before it shoots up.
So for anyone listening who's wondering if they'll have a robot butler by Christmas?
Definitely not. Don't expect 1 million robots walking out of Fremont this year. It is a very long game.
Okay, so that's the big strategic pivot, the new book. But let's check the scoreboard for a second, because they did just report Q4 2025. How's the business doing right now before all the robots?
It's surprisingly healthy, actually. Revenue came in at $24.9 billion, which beat expectations. Earnings per share were 50 cents, which also beat the consensus. So, the core business isn't falling apart.
And yet, I'm looking at the stock. It's down about 3.4% to around 416. If they beat on top and bottom line, why is Wall Street so unhappy?
It's the spending. It's all about the forward-looking guidance. This is the bet the company moment. They announced capital expenditures. The CapEx are jumping to over $20 billion in 2026.
$20 billion
Yeah.
in 1 year. That is a staggering amount of money.
It is. It's more than double what they were guiding for before. And for investors who, really prize cash flow and efficiency, seeing a company get ready to burn that much cash, it makes them nervous.
Where does $20 billion even go?
Concrete, steel, and very, very high-tech machinery. They're funding 6 new factories at the same time.
6. Okay, let's break that down. Right?
Uh-huh.
The Optimus factory in Fremont. What are the other 5?
Okay, so you've got the Cybercab factory, a new semi factory for the trucks, a lithium refinery, an LFP battery factory, and another mega factory for energy storage, plus, and this is a big one, a ton of spending on AI compute.
I want to pause on the lithium refinery. That feels like such a weird side quest for a car and robot company. Why get into chemical refining?
It goes right back to that supply chain control we talked about with the robots. They realized that mining lithium is actually pretty easy. The real bottleneck is refining it into battery-grade material.
Oh.
So by building their own refinery, they're trying to break a choke point that could stall everything else. If you can't get the refined lithium, you can't build the batteries, period.
So they're literally trying to build an entire industrial ecosystem all at once.
They are, and that is why the stock is jittery. The CFO even admitted it feels daunting, but he also called it the most exciting change in their history.
Speaking of things that aren't just cars, let's talk about autonomy. Because for years, FSD is coming next year has been the running joke. But reading this, it sounds like maybe the joke is over.
The tone has definitely shifted from, say, aspirational to operational. They confirmed unsupervised FSD is live in Austin right now.
And just so we're all on the same page, unsupervised in this context means what exactly?
It means no driver, no safety monitor in the passenger seat with a kill switch. And as of yesterday, no chase car following it around. It's just the car on its own.
That is a huge milestone. How many are we talking about? Is this just a couple of cars on a closed loop?
No, they said the fleet is now over 500 paid ride vehicles running in Austin and the Bay Area. And they have plans to expand to dozens of U.S. cities by the end of this year.
But there's a big asterisk on that, right?
Yeah.
Assuming regulatory approval.
A huge asterisk. That phrase is doing a lot of heavy lifting. Every city is different, but the confidence in the tech seems to be there. And that brings us to the new hardware, the Cybercab.
Right. Production starts April 2026. This is the purpose-built vehicle.
Yep. No steering wheel, no pedals, and it's a dedicated 2-seater.
I saw some pushback on that. Why only 2 seats? Seems kind of limiting. What if you're going to the airport with luggage or friends?
It's a pure efficiency play. They cited data showing that 90% of all vehicle miles traveled are with just 1 or 2 people in the car.
90%.
So if your goal is to build a robotaxi network that competes on the lowest possible cost per mile cheaper than a bus ticket, why drag around empty seats?
So it's not a family car. It's a utility.
Yeah.
Public transit that comes to your door.
Exactly. And that changes the whole business model. Did you see the update on how they're selling FSD now?
I did. Subscription only, right? You
Well,
can't buy it up front anymore.
Gone. They're moving to a pure recurring revenue model. Before, you could pay, $12,000 or $15,000 and give them a big cash injection. Now it's monthly only.
That's got to hurt them in the short term, though. They lose all that upfront cash.
It hits automotive margins right away. But long term, you're building a massive, stable base of monthly recurring revenue. It's the classic sauce playbook. Millions of cars paying $100, $200 a month forever. That's a very different business.
So we have robots, we have robotaxis, 6 new factories. But as I was going through the 10K, I felt like there was this bottleneck kind of hiding in the technical notes. A lot of talk about chips and something called terafabs.
This is where it gets really interesting and frankly a little concerning from a supply chain standpoint. Elon mentioned he's spending every Saturday, his only day off, working on the AI5 chip design. He called it the most critical thing for the company.
Every Saturday. When the CEO is micromanaging silicon design on his weekend, you know it's a problem.
It's a massive bottleneck because without the chip, the robot is just a mannequin. He used that Tin Man analogy. He said Optimus is worse than the Tin Man because it can't even walk without the AI brain, and the risk is supply.
So they're worried they can't buy enough chips from NVIDIA or
It's
somebody.
deeper than that. It's about where the chips are actually made. They're planning this terafab in the U.S. because they think even partners like Samsung and TSMC won't be able to supply enough volume in 3 to 4 years.
Sure.
But there was one specific fact in there about the U.S. supply chain that really just floored me.
What was that?
There are currently 0, as in non-advanced memory fabs at scale in the United States.
Wait, really? We have Intel, we have chip fabs coming online.
We have logic fabs, the ones that make the processors, but AI needs huge amounts of high bandwidth memory sitting right next to that processor, and almost all of that advanced memory production is overseas. So Tesla is basically saying, if we don't build this ourselves, we're completely vulnerable.
And that's the terafab concept. It's not just a chip factory.
Right. It's an integration plant, logic, memory, packaging, all under one massive roof. It's another huge piece of that $20 billion spend, but they see it as existential. If the chips don't show up, nothing else works.
And that connects to the XAI investment they announced, right?
Yes, and the synergy there is fascinating. They're using XAI's Grok model not just for chatting on social media, but as an orchestra conductor.
An orchestra conductor for what?
Fleet logistics. Imagine 10 million cybertabs in a city. You can't manage that with a spreadsheet. You need a massive AI to optimize routes, predict demand, handle charging. Or if you have 1,000 Optimus robots building a factory, Grok would be the foreman telling them all what to do.
That is straight out of science fiction. An AI foreman for robot construction workers.
It's the vision. And it brings us to this broader mission. They actually updated their corporate mission statement.
Amazing abundance.
Right. Amazing abundance. It sounds, almost utopian.
It does. And they used a new term, universal high income. I've heard of universal basic income, UBI. How is this different?
They're making a key distinction. UBI is usually framed as, a government handout because there are no jobs. Universal high income is their theory that if robots and AI actually work, the cost of goods and services will drop so low that everyone's purchasing power skyrockets.
So you don't get a check for $1 million, but everything is so cheap you live like you have $1 million.
That's the idea. A deflationary supercycle driven by robotic labor.
It sounds great, but let's bring it back to the here and now. There are some serious headwinds. We mentioned the CapEx. There's also the political side. I saw a note about the ODBA.
Ah, yes. The One Big Beautiful Bill Act.
Look at all the names these politicians come up with.
Enacted July 4th, 2025. And this is a big deal for Tesla. It repealed a lot of the EV and solar tax credits that were in the old Inflation Reduction Act.
So those government subsidies, the $7,500 tax credit for an EV, that's gone.
Gone. The training wheels are off, which means they have to compete purely on price and value now. And at the same time, the competition is getting fierce. Elon was surprisingly candid about China.
Yeah, he called them an ass kicker.
He did. He said China is the only real competitor in the humanoid robot space. They're just incredibly good at manufacturing, and they're moving fast.
So while all this chaos is happening, robots, politics, chip shortages, the energy division is just kind of quietly growing in the background.
It's hardly quiet anymore. $12.8 billion in revenue, record gross profits. They're aiming for 100 gigawatts a year of solar cell production. For any other company, that would be the whole story.
Right.
At Tesla, it's just, oh, and by the way, we're also becoming a massive global utility.
It's unbelievable. Okay, so let's try to synthesize this. We have a company killing its most famous products, spending $20 billion on 6 new factories, designing its own chips because the U.S. can't supply them, and betting everything on a robot that hasn't even ramped up yet.
That's the summary. They are trying to transition from a car company to an AI and robotics infrastructure company. The car itself is almost becoming secondary to the intelligence inside it and the robots that build it.
So what does this mean for you listening, if you're just a regular person watching this unfold?
I think it means we all need to recalibrate how we think about transportation and labor. If Tesla is right, and that is a massive if, given all the risks, we are looking at a future where the cost of moving and the cost of making things just collapses.
Right.
But the transition, the next few years,
It's going to be messy.
very messy. High spending, tons of construction, and regulatory fights in every single city.
It feels like they're just trying to pull the future forward by sheer force of will.
That has always been the playbook, right?
Right.
But the stakes have never, ever been this high.
Which brings me to a final thought for you to chew on.
Mm-hmm.
We talked about that S-curve, that really slow ramp up before things take off. If the Model S and X are gone in a few months, and the Optimus and Cybercab ramp is stretched out and slow to start, what happens in the gap?
That's the multi-billion-dollar question, isn't it?
What happens to the company's identity and its revenue in that valley between the car era and the robot era? It is going to be a fascinating and probably very bumpy ride to watch.
Indeed. A new book with a very suspenseful first chapter.
Thanks for joining us on the deep dive. We'll be watching that ticker and those robot videos right along with you. See you next time.